Good day everyone. In this video, we are going to discuss the income tax for corporation. This video includes the discussion on the updates from the new tax package, the CREATE law or the Corporate Recovery and Tax Incentives for Enterprises law. In this part 1, we are going to discuss basic concepts of the corporate income taxation, classification of corporate taxpayers, sources of taxable income, after that, the categories of income, and the different tax rates. In corporate taxation, we have different tax rates. We have the generic or the general one, and tax rates for special corporations that we are going to talk about later on. For the part 2, on the next video, we have the computations of the regular corporate income tax and the minimum corporate income tax that we are going to tackle on the next part. So first, the basic concepts of corporate income taxation. The classification of taxpayers. This is from the tax code. For the purpose of income taxation, the tax code provides that the term corporation shall include this: partnership, joint stock companies, association, cuentas and participation, insurance companies. So, partnership, it does not include the general professional partnership. We already talked about this in the discussion for individual income taxation. So the GPPs, in order to compute the tax payable of the GPPs, we are going just to divide the net income of the partnership to its partners. So individually, each partner shall be computed each income tax payable. General partnerships or partnerships as a whole they are treated as a corporation in the tax code. Corporation also exclude joint ventures and consortiums. Because of the update or the revised corporation code, another classification of corporate taxpayer, another one is the one-person corporation. Yan. This is from the revised corporation code that was signed into law in 2019. We have the domestic corporation, which is created under Philippine laws, and the foreign corporation. We have two: resident foreign corporation and the non-resident foreign corporation. So let's see. The sources of their taxable income. If the corporation is domestic, just like the individual taxpayer, the sources of the taxable income will be within the Philippines and outside the Philippines. In short, the sources of the taxable income will be coming worldwide. However, foreign corporations are only taxable with the sources within the Philippines. So just like the aliens or the resident aliens in the individual income taxation. Categories of income and tax rates. We have the business or the regular income, the passive income, and the capital gains. So both of these are taxed through the final withholding tax system. The business or the regular income, that are just the incomes that we're going to compute through the regular corporate income tax rate or the other rates for special corporations. So let us take note of this. Domestic and resident foreign corporations are generally taxed at 30% of the taxable income. This is since 2009. However, in our new law, the CREATE law, domestic and resident foreign corporations are generally taxed at 25% of the taxable income. This is effective on July 1, 2020. The CREATE law was signed into law on April 11, 2021. However, the effect of the regular corporate income tax from 30% down to 25% was applied effectively, retroactively on July 1, 2020. Okay? So remember, our annual income tax for the calendar year, the deadline for the annual income tax return is on April 15. The CREATE law was signed into law on April 11. And the effectivity of the rate was on July 1, 2020. So it applied retroactively. For the computation on 2021, the accountants and the accounting firms have computed this by the CREATE law, since the deadline was on April 15, 2021. The law was on April 11, right? So the accountants can apply it retroactively. They can adjust. They can have their adjusting entries. Yun. So there. Provided that corporations with net taxable income not exceeding 5 million and with total assets not exceeding 100 million pesos, excluding land on which the particular business entity is situated. So, how about this? In this regard, the regular corporate income tax rate would just be 20%. In comparison with the RCIT in the previous slide, because of the CREATE law, down to 25% only. From 30, now we have 25% corporate income tax rate. But if you are included, your business is included in the MSMEs or the medium, small, micro entities, the net taxable income not exceeding 5 million pesos and total assets not exceeding 100 million pesos. So, you are an MSME. Your corporate tax rate will just be 20%. Yun. Okay, so how to compute for the taxable income? You have your sales and or your revenues. Deduct your cost of sales or services. You will arrive at your gross income. Then add the other non-operating income. You will have now your total gross income. Deduct your operating expenses. Now, we will arrive at the taxable income. So, this is just an outline for the computation. Now, let's talk about the rates for domestic corporations. First, we have the proprietary educational institution and non-stock, non-profit hospitals. Okay, so generally, they are taxable at 10%. However, if the gross income from unrelated trade, business, or activity is greater than 50% of gross income from all sources, taxable income is subject to 25% or 20% RCIT. That the rates that we talked about earlier. Generally, the corporate tax is 25% or 20%, whether you are an MSME or you are just a big corporation regular. So 10% of taxable income. But because of the CREATE law, we have some changes here. Now, 1% only of taxable income, effective July 1, 2020 until June 30, 2023. So, come July 1, 2023, the rate will be back at 10% taxable income. But for now, until June 30, 2023, only 1% will be the rate for the proprietary educational institutions and non-stock, non-profit hospitals. So, what are the proprietary educational institutions? So, these are private school mandated or maintained and administered by private individuals or groups that has a permit to operate from DepEd, CHED, or TESDA. If the educational institution does not have the permit to operate from the following government agencies, then that educational institution cannot avail the special rate of 1%. What will be the rate? You will just go back to the general rate, which is the 25% or the 20%. Next, the GOCCs, or the government-owned or controlled corporations, agencies, and instrumentalities, yes, taxable at rates of corporations engaged in similar business, industry, or activity. They are exempt. So the exemption, GSIS, SSS, PhilHealth, the Pag-ibig or the HDMF, Home Development Mutual Fund, and the local water district. Yan. Next, the foreign currency deposit units, or the FCDU. So this have no much does not have much difference from the create, only this one, the RCIT, 25%. Again, before this is 30%, but now we have the 25% and the 20% rate. So here, the foreign currency deposit units, income from foreign currency transactions with non-residents, OBUs, local commercial banks, branches of foreign banks, and other FCDUs. Income from this are exempt from the tax. Income from foreign currency loans to residents, 10% final withholding tax, and the other income is subject to 25% regular corporate income tax. Passive income and capital gains. So for the domestic corporation, interest on bank deposit and yield monetary benefit from deposit substitutes and trust funds or similar arrangement, we have 20% final withholding tax. Interest on bank deposit under FCDU, 15% final withholding tax. Royalties, 20% final withholding tax. Dividend from domestic corporation, exempt. These are called intercorporate dividends also. Then capital gains from sale of shares not traded in the Philippine Stock Exchange, 15% capital gains tax. And capital gains from sale of land or building, 6% capital gains tax. This capital gains tax is just the same in the computation for the individual taxpayers. Next, now we have the resident foreign corporations. International carriers. What are these, no? These are the planes. Yan. What will be the tax rate if the carrier is, for example, not registered here in the Philippines, so not a domestic corporation like Philippine Airlines, no? That is a Philippine carrier, airline carrier. But how about the Emirates, for example, from Dubai, so, and the Singapore Airlines, what will be their tax rate? So 2.5% of gross Philippine billings, subject to reciprocity. Okay, we will have a separate video discussion about international carriers. But for the meantime, let us just remember the rate of 2.5%. Next is branch profit remittances, 15% final withholding tax. These are the remittances from the companies that has a branch here in our country. Major examples are for example, Forever 21, H&M. The headquarters of that particular brand is not in the Philippines, right? So the branch are just what we have here. The branches are just what we have. Regional or area headquarters. Okay, so what are this? In the Philippines, these are just administrative branch of a foreign corporation engaged in international trade in the Asia Pacific region or the APAC and other foreign markets. It is neither allowed to manage their operations nor derive income from any source in the Philippines. So these are merely headquarters that is situated here in our country. They do not operate, they do not conduct any businesses, but rather the offices that is here in our country is just used for administrative purposes. So, for example, they have branches here. This regional or area headquarters are the purpose of this are just for monitoring. So something like that. All for administrative purposes only. So these are exempt. Okay, so no operations. Next, regional operating headquarters. This is an extension of a foreign corporation allowed to derive income in the Philippines by performing qualifying services to its head office, affiliates, subsidiaries, or branches in the Asia Pacific region and other foreign markets. So, if in the previous slide, the office is mainly used for administrative purposes, this one, operating headquarters, since this office is allowed to derive income from the Philippines, now they can earn income, right? So we are now bound to tax them so that the taxable income will be subject to a 10% rate. However, because of the CREATE law, the rate is now 25%, effective date January 1, 2022. The FCD use for a resident foreign corporation. So from non-residents, OBUs, local commercial banks, branches of foreign banks, other FCDUs, income from this, from foreign currency transaction, exempt. Interest from foreign currency loans to residents, 10% final withholding tax, and other income is subject also to 25% regular corporate income tax. So, foreign currency deposit units is just the same with resident foreign and the domestic corporations. Now, let's move on to the offshore banking units or the OBUs. So, this is the tax rate. Yan. But because of the CREATE law, what happened? OBU shall not be taxed as resident foreign corporations upon effectivity of the CREATE. So, every income is subject to the regular corporate income tax rate of 25%. Passive income and capital gains. Okay? So, interest on bank deposit and yield, monetary benefit from deposit substitutes and trust funds or similar arrangements before, 20% final withholding tax because of the CREATE. Same, 20%. Still 20%. Next, income on bank deposit under FCDU. Before, 7.5% final withholding tax. Now, it doubled to 15%. Royalties, 20%. Dividend from domestic corporation, the intercorporate dividend, still exempt when it's transferred to resident foreign corporation. And then capital gains from sale of shares not traded in PSE. Before we can compute that for the first 100,000, we shall apply 5%, and in excess of the 100,000, we are going to use 10%. But in CREATE, to make it simpler, we just have to apply the 15% rate. So, upon CREATE, effectivity of CREATE April 11, 2021. So, non-resident foreign corporation are generally taxed at 30% final withholding tax based on gross income. But effectivity of the CREATE law, because of that, January 1, 2021, non-resident foreign corporation are generally taxed now at 25%. So, non-resident foreign corporation, let's see the tax rate. Um, this the following non-resident foreign corporation, the rates of this does not change because of the CREATE law. So, no change at all. For cinematographic film owner, lessor, or distributor. So, for example, a group of creative team is going to film a movie here in the Philippines. So, foreigners, the directors, the cast, um, the script writers, so all of them, if they earn income because of that movie, so the income that will be earned will be subject to 25% final withholding tax. Next, owner or lessor of vessels chartered by Philippine nationals, 4.5% final withholding tax. Owner or lessor of aircraft, machineries, and other equipment, 7.5% final withholding tax. Passive income and capital gains. So, interest on foreign laws, this was not mentioned on the CREATE. So, assuming this rate is just the same, 20%. Dividend from domestic corporation. So, from 30% final withholding tax, now down to 25%. Capital gains from sale of shares not traded. So, same under CREATE, it became simpler, just the total multiply by 15%. So, that would be all for the part 1 of our discussion. For the part 2, we are going to talk about how to arrive at the tax payable using the regular corporate income tax of 25%, and we are going to introduce the minimum corporate income tax or the MCIT. And for the individual discussion of each, yan, we'll see you in the next video.